Hello, welcome to Business Incorporated. I'm Ladi Williams. Coming up on the show today, South African government targets tax incentives due to persistent trade-off. And Mozambique receives first vaccines from China after COVAX delay. And landowners in Nairobi to pay higher land rates. Let's get the show started with intraday market numbers, which are mostly positive across regions. In Africa, the NSE lost 0.25%, reversing Wednesday's positive sentiments, and was dragged by the banking sector, which declined 1.10%. On the flip side, South Africa's GSE jumped 1.44%, while the EGX 30 in Egypt soared 1.58%. Kenya ended Wednesday's session marginally lower by 0.02%. And it was a similar picture in the Middle East, where major markets were positive while one declined. Only the Abu Dhabi index fell 0.03%. Dubai's main index, on the other hand, jumped 0.78%. The Qatari index saw the highest gains, jumping 1.69%, while Saudi Arabia's market was up 0.84%. And European stocks opened modestly higher today as global markets jumped following reassuring comments from Federal Reserve Chairman Jerome Powell on the inflation outlook. Let's get more updates from Ashtus at the Frankfurt Stock Exchange. Great to have you, Ashtus. Well, investors' risk appetite is showing signs of returning across global markets. How are things in Frankfurt?
Well, it's no different here. There are less concern around inflation now after that statement from Fed Chair Jerome Powell. He clearly mentioned that inflation is nowhere in an uncomfortable territory as of now, and it could basically take 3 years for that inflation to reach the target that they've set for themselves. So clearly there are no concerns there. And he even mentioned that even when prices are rising of things like cars and others, they have more to do with some short-term factors like chip shortages and all. So we shouldn't be worried. And markets have definitely taken this as an indication that perhaps the Fed is not going to tighten the money taps anytime soon. So that's definitely a positive. But if you look at the DAX behind me, that's given up on those early gains and it is trading in the red. That's primarily to do with the rising bond yields that you've been talking about. That is still spooking investors and the fact that it could lead to higher borrowing costs. That's a worry. And also the strengthening of euro has also spooked the traders here, because we all know that DAX is an export-heavy index, and that's the reason why euro going up is bad news for them.
Well, a lot of that has also to do with some positive developments on the vaccine front, isn't it?
Yeah, absolutely. The gains were actually because of what we heard on the vaccine front. There is this expectation of vaccine-fueled recovery, a quicker one quicker than earlier anticipated. So yes, good news first came from the US FDA, where reports found that the Johnson & Johnson vaccine is safe and it is effective, which means that it could be approved anytime soon. And the J&J vaccine is quite a significant one in this battle against the virus, because it is a single-dose vaccine and it does not need fancy refrigeration. Just basic refrigeration would do, and which means that it is easy to store and actually supply around. So that's one of the positives. Then Moderna said that it had developed a new version of its vaccine that could be effective against the variant that was first discovered in South Africa. So that, in fact, it has even bottled them up and supplied for clinical tests. So that's again a positive. And last but not the least is the BioNTech-Pfizer. A study in Israel shows that it is extremely effective. And now experts say that perhaps it could be critical in the world reaching some sort of a herd immunity.
All right, let's look at commodities now. Copper prices have jumped to the highest levels in almost a decade. What's driving them up?
Well, this expectation of a vaccine fuel recovery, there is a lot of demand for commodities, and we spoke about this earlier this week about how analysts are seeing this as a beginning of a super cycle where prices would go up for a bit, not only a bit, but for a few years now, because there is going to be strong demand for commodities as the world recovers, and primarily it would be driven by green investments, and there could be a lot of demand for metals like cobalt, nickel, copper, aluminum as we go ahead into future of mobility and also future of electrification.
All right, Ashutosh, thanks a lot for the update. Do enjoy the rest of your day.
Thank you.
And markets are bouncing back today as anxiety about rising inflation fades, and after encouraging news about Johnson & Johnson's one-shot COVID vaccine, UK is not an exception as the FTSE 100 index touched a one-week high at the start of trading. Let's get in today's market update with Juliana. Hello, Juliana. Great to have you. ASDA has announced a major shake-up of its operations. This certainly puts thousands of back office jobs at risk. What more are you hearing about this?
Yeah, not great. Just as Britain was celebrating the fact that two British billionaires had taken over Asda from Walmart, now we're hearing that this is a major shake-up that they plan on doing. Last week there was already a controversy about the Issa brothers' takeover of Asda, because most of the £1 billion deal is going to be done through a debt repayment. This is the second controversy, and it does appear that about 3,000 staff may lose their jobs. They're at a consultation at the moment with about 5,000 staff, and this is because of the shift in online shopping, which has absolutely surged over the past couple of months, not just, of course, in clothing retail, but in home groceries, especially those who are shielding or haven't been able to get to the supermarket. It's just been a safe haven for them. We do have a brief statement from Roger Burley, who's the chief executive of Asda, which is the third largest supermarket here in the UK. He says the last 12 months have shown us that businesses have to be prepared to adapt quickly to change. I'm incredibly proud of the way we and our staff have handled the pandemic. We know that these proposed changes will be unsettling for colleagues, and our priority is to support them through these consultation stages. We're still waiting for regulators to confirm that the Issa brothers have actually sealed and completed the deal with Walmart. And we're still also, Laddie, not sure about whether or not these jobs will be lost or whether there'll be a shift. We do know that there is a consultation with 5,000 staff, and that by the end of the year, Asda hope to redeploy 4,500 staff to their online grocery shopping. So hopefully the majority of the staff they're talking to at the moment will be put into new roles.
Yeah, let's hope nobody loses their jobs. A couple of earnings reports today. Primark, Aston Martin, Seiko, and IKEA. How are these driving the market's sentiment this intraday?
Yeah, I heard you talking to Ashutosh in Frankfurt about commodities, and commodities are doing well. That's actually what's driving the FTSE at intraday, especially because Brent crude is currently trading above $67 a barrel. We're seeing the oil majors lead the all share. BP shares are up 2.48%. Royal Dutch Shell, their shares are up 1.93%. That's really what's driving sentiment. We've spoken also this week about the bullish sentiment in the pound. That's continuing today. The FTSE all share is up 0.36%. The FTSE 100 is up by 0.45%, and the FTSE 250 is up by 0.02%. In currencies, the British pound is up against the US dollar by 0.11%, trading down, though, against the euro by 0.43%, and up on the Japanese yen by 0.37%. As you were saying, Associated British Food, they are the owner of Primark. They've delivered a statement saying that they've lost, since the beginning of the year, over £1.1 billion worth of sales. That's obviously because of the third national lockdown. Prime Minister Boris Johnson did outline at the beginning of the week when retail and non-essential stores will be open, hopefully by the middle of April. But even when stores do open, ABF do say that they expect to lose about £480 million in the first half of 2021. Even though investors were still cheered, their shares rose 1% at intraday.
And there's a report that Monday is exploring a possible takeover of DS Smith. How are DS Smith's investors reacting to this?
Well, this is still very early, and it's Bloomberg that are actually reporting this story. If it does indeed take place, and that is Mondi takes over DS Smith, that will be the biggest British business story of the year, worth over £5 billion. DS Smith, they are a paper and packaging company. Over the past 12 months, their shares have risen by about 10%. They've got a market value of over £5 billion. And again, going back to what we were discussing with Asda, this is because there's been such a shift with online shopping. So lots of people are looking for package company, and DS Smith seems to be hitting that tune, which is why Mondi are interested in talking to them, bearing in mind this is still very, very early stages. But as soon as that deal was announced by Bloomberg this morning, their shares rose 15%, Laddie.
All right, I guess we'll keep watching to see how the deal goes. Thanks for the update, and always a pleasure talking to you. Enjoy the rest of your day.
You too.
And stocks in Asia Pacific largely jumped today after the Dow Jones Industrial Average surged to a record closing high overnight. South Korea's Kospi led the gains originally as it jumped 3.5% to close at 3,099. In Japan, the Nikkei 225 gained 1.67% to close at 30,168. Shares of conglomerate SoftBank Group surged 3.84%, while the Topix Index also gained 1.22% to finish its trading day at 1,926. Hong Kong's Hang Seng Index also saw gains as it rose more than 1% as of its final hour of trading. Mainland Chinese stocks were mixed on the day as the Shanghai Composite gained 0.59% to 3,585, while the Shenzhen Component dipped 0.28% to 14,828. The S&P ASX 200 in Australia gained 0.83% to close at 6,834. MSCI's broadest index of Asia-Pacific shares outside Japan rose by 1.54%. And U.S. stock index futures were mixed in early morning trade today after the Dow closed at a record level. Futures contracts tied to the Dow Jones Industrial Average gained 62 points. S&P 500 futures hovered around a flat line, while NASDAQ 100 futures traded in negative territory. The moves comes after the Dow jumped 425 points on Wednesday to close at a record high in a volatile session, and at one point saw the 30-stock average drop more than 110 points. The S&P 500 advanced to 1.1%, while the NASDAQ Composite gained 1%. Rising rates weighed on stocks early in the session as the U.S. 10-year Treasury yield topped 1.4% and hit its highest level since February 2020. And oil prices rose for a fourth straight session in early trade today to the highest levels in more than 13 months, underpinned by monetary easing policies and lower crude production in the United States. Brent crude futures for April gained 0.3% to $67.23 a barrel, while U.S. West Texas Intermediate crude for April was at $63.30 a barrel, up 0.1%. Both contracts touched their highest since January 2020 earlier in the session, with Brent at $67.44 and WTI at $63.67. An assurance from the U.S. Federal Reserve that interest rates would stay low for a while boosted investors' risk appetite and global financial markets. And gold prices edged lower earlier today as higher U.S. Treasury yields dented the metal's appeal, although losses were limited by a weaker dollar and Federal Reserve Chairman Jerome Powell's dovish comments. Spot gold fell 0.3% to $1,798 per ounce, while U.S. gold futures gained 0.2% to $1,801. Elsewhere, silver slipped 0.7% to $27.79 an ounce. Platinum fell 1.1% to $1,254, while palladium eased 0.1% to $2,433. And domestic commodities market update is next. When we return from this break, do stay with us. And ginger is well known as a food spice across the world. Originally, the plant is a native of Southeastern Asia, but over centuries has been introduced to various parts of the world, like the Caribbean, the Americas, and Africa. The commodity is so popular owing to its number of uses. Nigeria is one of the largest exporters of ginger in the world after China and India. Let's talk more about this with Mayowa, a research analyst at financial derivatives company. Hello, Mayowa. Great to have you.
Thank you for having me.
So a lot of Nigerians are of the view that the concoction of garlic, ginger, and turmeric are prophylactic or an antidote to the COVID-19 virus. And this has led to a surge in the use, demand, and price of ginger lately. Do you see this a probability of a sharp drop in demand and price if the adoption of the AstraZeneca vaccine later this year in Nigeria starts?
Not necessarily. I do not think that it would necessarily lead to a sharp drop in the demand and the price of ginger. Like you rightly mentioned, ginger is used for a variety of diseases and is used across various industries. And so if we look at from the period of the first wave to now, we've seen the prices of ginger during the first wave increase, like you said. But then we can't attribute this price increase to only the fact that it was used as an antidote. There are also other factors such as supply chain disruptions and the fact that that was a planting season that also played a part in the price increase. And then looking at it now, looking at the AstraZeneca vaccine, even if it's gotten in Nigeria now or even later this year, the rollouts will be gradual and most likely not all Nigerians may get access to this vaccine. So people may still use ginger as an antidote. And also there, like you said, other uses of ginger that would always support the demand for the commodity. And so this would help keep the demand up and also prices stable to an extent.
Okay, apart from the unproven use of ginger as an antivirus therapy, it is also widely used for drinks, cocktails, soft drinks, and other confectionaries. What is the potential for producing ginger in a commercial scale in Nigeria, considering that the total domestic output is approximately about 400,000 metric tons?
So the average yield of ginger in Nigeria currently is about 20 metric tons per hectare compared to the global average of about 38 metric tons per hectare. This shows that there's a huge room for growth in the ginger production space in Nigeria. Also, currently, there's a huge supply-demand gap, even domestically. And then when we now also look at the global market, the global ginger market is valued at about, I think, $3.4 billion, which shows that it's a huge source of revenue for Nigerians and Nigeria as a country. So this shows that the ginger production space actually has a huge potential. But as usual, there are challenges that have limited the potential of this production space. We look at insecurity for one. Ginger is mainly produced in northern states, and then we know that there's insecurity in those parts. We also look at the low use of technology with our farmers and also poor infrastructure. All these factors have limited the potential of the ginger production space.
I guess same old problems. Well, ginger biscuits, ginger bread are becoming popular and widely consumed by Nigerian elite. Do you think that the extra demand for ginger products by this segment of the Nigerian society will support and justify the extra investment required to take the ginger business from a subsistence level to that of a commercial enterprise?
Well, no, not necessarily. I think that this segment is too small to actually justify an increased investment in this space. But then if we look at ginger holistically, we look at the usefulness of the commodity, we look at the production potential of ginger production potential in Nigeria rather, and then we look at the value of the global market. Looking at these factors holistically, they're enough to support not only support, but justify increased investment in the ginger production space.
All right, Mayowa, I guess I'll have some ginger tea later. Thank you so much for the update, Mayowa. Great to talk to you, and do enjoy the rest of your day.
You too.
And South Africa has introduced a significant change in tax policy this year, which will be reducing the number of tax incentives, expenditure deductions, and assessed loss offsets for companies The aim with these measures is to lower the corporate income tax rate of 28%, which is high compared to the global average rate of just over 23%. The corporate income tax rate will be lowered to 27% for companies with years of assessment commencing on or after April the 1st, 2022. National Treasury says the government has been looking at reducing the number of incentives to business, saying these tax incentives are public subsidies to the private sector. And landowners in Nairobi will soon start paying higher rates after the city hall tabled a proposal that fixes the charge to current asset valuation. According to City Hall, new rates will be based on between 0.1% and 0.11% of the current value of undeveloped land, setting a stage for costly levies. Currently, property owners pay land rates at 25% of the unimproved site value based on the 1980 valuation roll, which City Hall reckons has seen it lose on the appreciation of plots. City Hall is seeking to cash in on the sharp appreciation of land in Nairobi over the past 2 decades on increased appetite for real estate deals. And Mozambique's government says the country will receive its first COVID-19 vaccines today from China's state-owned Sinopharm that will be administered to health workers. The Southeast African nation of 31 million people will take delivery of the donation of 200,000 doses of the Vericell vaccine at an air base in Maputo, the capital. The inoculations arrive after the anticipated delivery of 2.4 million doses through the World Health Organization-backed COVAX program that was delayed until May. And with oil revenue in sharp decline, Algeria's government is trying to tackle its high import bill by producing more goods at home. To reduce spending on foreign food, it wants farmers to grow more bananas and has offered inducement for them to do so. Let's take a listen.
Faced with dwindling energy revenues and costlier imports, Algeria's government is turning to farmers like Mostafa Mauzauzi to help narrow its trade gap. So the government has lent him a hectare of land on the condition that he uses it to grow bananas. Mauzauzi, who already owns a tomato farm, has built greenhouses and has already harvested a banana crop on the new land near the Mediterranean coast.
Between 120,000 and 150,000 tons of imports, the equivalent of $200 to $220 million. We will arrive at 160,000 tons of bananas in 5 years. We will largely exceed our needs and what we consume.
Mauzauzi says bananas earn more for him than other crops because mostly imported fruit is more expensive. He plans to create an association for banana producers and wants the government to develop the crop more widely along the coast.
Gradually and not directly, we can reach self-sufficiency and we can stop importation within 5 years. How? The first year, we can produce 50 hectares in 14 cities, which makes it 700 hectares, 50 per city. 700 hectares in the first year, and we will double it in the second year.
For Algeria, an OPEC member that failed to develop its non-energy sectors before oil prices fell, the need to push the state-controlled economy to produce goods it currently buys from abroad is growing even more urgent. Food imports, accounting for around 20% of Algeria's purchases from abroad, totaled $8.07 billion in 2019, and the government has been providing loans at low interest rates for farmers to grow other crops too.
Our goal is to multiply the surfaces and have a surplus first. When we reach that, we will think about exporting.
Mauzauzi believes that if the government implements all promises made to farmers, the sector could end up helping out on both sides of the trade account by first meeting domestic consumption and then generating supplementary production abroad.
And that's a wrap on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.